Do we not have the countdown today?
Good idea. Let's have that countdown. Jeez, I think that happened with that Reggie that time as well.
Yeah,
Here
I
we
was
go.
like, oh, are we live?
Here we
Good
go. Here we go.
started.
Hey, coconuts. Welcome back to our Tuesday weekly market updates. Rakesh here.
Anthony here. And we
Well,
are
and
back
this-
today. Yeah.
Yeah, we
Rakesh, good to have you back.
Thanks, man. Thank you. Good to be back.
Yeah, happy to stop talking about China for a bit. Although we will get there, but yes.
Definitely. Man, it's the last show for the year. Next week when we do it, it's the new year.
Yeah, it's flown by, right? I mean, I don't know what I've done in 2021, but I'm glad it's over.
We should probably do a retrospective, actually. Thinking about it.
Thinking about it.
Yeah, I mean, we have come a long way. I think we've, and I do believe that coconuts, those listening in really like our new format of the show, right? Cutting it down from 45 to 30 minutes, having just me and Anthony talk to each other, talk crap, right? We don't need Reggie anymore. All's G there.
Yes. I'm sorry.
And this week, of course, I think Jefferson is a little under the weather. He'll look to join us next week as well, and definitely looking forward to that trio in early 2022.
Right.
For this week, Anthony, why don't you tell us a bit about what we're going to talk about?
Yeah, I mean, the idea of a retrospective didn't occur to me. I think we just kept looking forward, right? So we'll just talk about what's going on next year, what we think will happen, and how we'll play it. Essentially, that's just it, right? And really, because it's Christmas, I haven't read the news, so yeah, let's just talk about what we think, and we can start again next year.
Yeah, for sure. So effectively, a forward-thinking episode now in terms of plans, in terms of strategies for 2022, what we're looking to do on our side. At least, I'm looking to share with you, Anthony, as well as our coconuts listening, about what my plan is for the next 2-3 weeks, 1-2 months, and see where we go.
Yeah.
Also, but first things first, what did you eat for Christmas, man? Did you have turkey? Did you have anything like that?
I had an Asian-inspired Christmas meal. So we had like lamb ribs, beef ribs, but char siu flavor, that kind of thing. It's pretty nice. Yeah, I think that the good thing about being in Singapore is Asia focused, right? But Western concepts and Western foods, that's a nice part to be. What about you? You were in Germany, right?
Yeah, I was in Germany. Actually, I was on the plane on Christmas Day. So so I had plain food for dinner.
Business class plain food?
No, I wish economy.
Okay, never mind then.
Yes.
At least you managed to leave. Honestly, I think any travel now is good travel.
Yeah, no, definitely. It was a really, really good mental health break, I feel. But yeah. Cool. All right, let's get started. Anthony, why don't you kick this off?
Okay, I think just for today, we'll go topic by topic. So for coconuts listening, we have been trying to focus a bit more on US tech. We have been doing a lot more of US tech over the last few weeks. So we will start off with that. Small to mid tech, mega cap. Then of course we'll talk a bit about China and Hong Kong because we are in Asia. I like China and Hong Kong, so too bad. And lastly, in case you haven't heard, there's this whole interest rate quantitative easing, tapering of quantitative easing coming up or going through. So there's a bit of talk about that. in addition to what we did last week. And last year, of course, it's 2021. We are no longer the Stone Ages. There has to be some crypto somewhere. So broad topics
Definitely.
here. We'll go through them one by one. If you are interested, if not, just skip to the next one. And yeah, at the end, we'll just sum it up with what we'll do.
Yeah,
All right.
definitely.
So
Very
the
interesting.
first one, right? And I think this is the part that we both like because it's high risk, high reward, high volatility, it makes you excited and you can't sleep. Small and mid tech US technology, right? So that's your amplitudes, your zooms, maybe your EVs if you're tech nowadays. What do you think? What do you think will happen to these type of companies?
Yeah, that's a very big one, given the fact that what the this quarter has been like. It's it's been a whole ride of roller coasters, huh? For this specific space.
Yeah, they've all
Uh,
just crashed.
exactly, and for me, it doesn't make sense, right? So I mean, I think if you look at the amplitudes of the world, yes, it was running at 50 price to sales ratio, and that's something that I'm looking to look forward more. I would say that I
Mhm,
wasn't really fully looking at that when I was analyzing my stocks. Mainly because I'm looking more at the fundamentals, right? Looking at the expansion areas, looking at growth areas, not looking actually at the perception of the stock.
mhm.
And I think that's something that I need to look at further, and especially in this tech space, right? So that's one of the things that is going to me, or that's what I'm thinking about. And with all this decline that we've seen in the last quarter, I definitely feel that there is some growth and some gains here to be made in Q1 and effectively Q4 earnings, right, which will happen probably
Yep.
in January.
Okay.
Yeah, that's what I'm thinking so far as a high level. What are your thoughts there?
I don't know, right? So I think we come from the same starting point. We both like good businesses that grow. Maybe I look a bit more at relative valuation, so things like price to sales and all that, and that's why I think when we talk about amplitude a month or two back, I was like, oh, this is crazy, right? The price to sales is too high.
That was
However great
30x
you are
though
as
when
a
I went
business.
in. When I went in, it was 30x.
Oh, okay. I'm sorry you made money, right? Good for you. But I mean, look, right? But that's the thing. So buying a good company at a reasonable valuation, it's always preferable to buying a good company at expensive valuation, right? Because at the end of the day, we still need the valuation to make sense to in essence sell for profit, right?
Mm,
So I think that's the part that's interesting to me. In terms of timing, I don't really agree with you. I think that still uh, there's been a bit of a rally over the past week, but there's still a bit of fear, I would say, and there's
mhm,
still a lot of volatility in the market. So I wouldn't say that the next earnings round will be like Q1 or Q2 2021, where any small beat shoots the stock up by 10-15%. I still sense it's a bit more like Q3 or Q4, where a small beat, unless you are a really favorite stock, sends the price down. Or it trades it sideways. So I don't think earnings plays will be good. I think it's still a matter of focusing on the fundamentals, looking backwards, maybe 2021 was a bit overhyped. So looking backwards to 2020, 2021, early 2021, how they have improved as a business and their relative valuation, and then see whether it still makes sense for this valuation, right? Which is essentially what I've been talking about with Zoom and all of that. So yeah,
yeah.
that's just a continuation of the same thing. And yeah, that there, look, at the end of the day, we are in a growthy phase. We are in a tech phase still, right? Software is still leading the world. That hasn't changed. Data is
Mhm.
still important. Work from home, the cloud transition, all of these will continue happening, right? So these are the teams that have won big over the last 2 years, and I don't see why they would stop now. Yeah.
No, fair enough. And maybe we could talk a little bit there, right, where we disagree, because I think that the market, yes, of course, is pricing into the fact the tapering and all the uncertainty that goes with COVID together with other different variables.
Mm.
What is your thinking behind it? Because okay, so maybe I'll talk about my thinking and then love
Yep.
to hear your thoughts here. So my thinking is this, right? That we've seen a very volatile area in the last quarter for these growth stocks, but the fundamentals have remained largely the same, if not bettered, almost like
Mhm.
quarter on quarter. That's why I see a
Yes.
better one there. That said, I do see, because the Fed is looking to taper, and they've mentioned that 2 weeks ago, or 3 weeks ago, I'm not entirely sure, there won't be as much liquidity in the market. So that jump, while agree, won't be 30,
Mhm.
20%. However, I think I do see a 5 to at least a 10% rise in these stocks if they outperform their expected. Not
Yeah.
last quarter, but they are expected.
Yeah, I see that's where and this is all conjecture, right? You are guessing, I'm guessing. I don't
Of
think it'll
course, yeah.
happen. And the reason that I have is this, right? We look at the weakness, we look at this is terrible, it's terrible, it's terrible. It's terrible only for small cap, right? It hasn't really hit the giant US tech, like your mangas and Fang, and they're the same companies, but yeah, different acronyms. It hasn't really hit them, right? So when and my take on it is when there is real pain in the market, like we are nearly there, but we are not really there yet. But when there is and those bellwethers start falling,
Mm,
there is broader contagion, right? So when people start seeing the index as a whole start falling rather than individual shares, then these will continue getting sold down as well. So
yeah.
yeah, there might be a temporary boost in earnings, but I think Q1 until the Fed actually starts rising interest rates. So it's not only
Mm,
stopping quantitative easing, it's rising interest rates, then we can have a bit more clarity on the picture. I think right now there's still a bit of hope. So there's a lot of volatility up and down, right? But and because of that volatility, please stay invested. We could be wrong, but in terms of a range of outcomes, I still think that there is more pain coming our way.
mm. So in other words, what you're saying at, yeah, and I think I agree with you where when the Fed looks to raise the interest rates and actually raises the interest rates, we will see something. I don't think it's priced in right now.
Yeah.
But another way to look at this, though, is not look at 1 quarter, right? You look at 2 years or 3 years with these growth stocks. And I think that's where you and I also fundamentally agree. Where you look at the numbers, you look at, the FCF, for example, you
Mhm.
look at the price sales ratio, you look at where they're going, you look at the expansion strategies. And if your time horizon is 2, 3, 4 years, this is quite a decent opportunity then.
Yeah, I completely agree. I mean, I haven't sold that all into cash, right? I still
Mm,
hold a lot of my growth stocks, and I still DCA a bit here and there. I just don't DCA as aggressively in as I would have when it was going on, when everything was going up and to the right? So
sure.
it's a bit of market timing on my part, which I shouldn't do. I know, but I can't help myself, right? It's fun. You back your own judgment, I would say.
Definitely. No. Cool.
Cool. All
Awesome.
right.
Yeah.
I think that's it for the high volatility guys. Do you have anything else you want to add on this?
No, I think yeah, that's roughly going to be my thinking, my play as well. Yeah.
Cool. All right. We are aligned somehow. We should have a
I
coconut
know, yeah.
portfolio. Reggie, another job for you. Thank you very much. Okay. Okay, the next one, mega cap. So this to me
Mm,
is your fangs except Netflix because they're not that big. It's Facebook, Amazon, Google, sorry,
Apple,
Meta, Apple,
Meta.
Google, and maybe
Uh,
Nvidia, right?
Did you say
Depends on how we
Amazon?
look at it. Yeah, I did.
Yeah.
There's a lot of A's there. We get confused, but yeah, this ilk, that's six of them. What do you
Yeah.
think?
Ooh. Um, a little worried. A little worried.
Hmm.
But not as worried as I like, not as uncertain as I am with growth stocks. I think
Hmm.
that's where I would be. And because the growth stocks have been going through a turmoil, right? This last
Mm.
3 months. I've not really seen that with my mega step with the mega cap US tech, right? Your big
Yeah,
guys.
I think they've been doing very well actually.
It's
They
been
are
they've
the
been
ones
increasing.
driving. Yeah, they're the ones driving the index all time highs.
Yes, and it could be. And my conjecture here as well is that they're taking money out of the growth stocks and putting into these big tech because firstly they believe in the industry. Number two, it's more stable, and number three, these guys are well diversified even in their business operations. So you won't see that much of a drip as we see with growth stocks.
Yeah,
Um,
I
Go
I
for it.
don't know how much more to add to that. To be honest, I
All
mean,
right.
yeah,
Okay.
they are safe, right? It's a flight to safety. They are there. They have good companies. I mean, individually you can pick them off and say, I don't like this, I don't like that. But fundamentally, strong cash, strong balance sheet, moats, everything you want is there. not cheap enough to be a value stock, but definitely, you're paying a decent, well, I think a slightly elevated price now for the growth that they're having. 6 months back,
Yes.
I've said it's a decent price for their growth, but now it seems a bit difficult.
Mm.
Yeah, so that's
The
about
only
it.
thing I have here though, is that the and the thing that always goes in my head is the fact that there's a lot of liquidity into the market. Right.
Mhm.
So obviously when people diversify, people put money into mega tech and stuff like this. And when the Fed does increase the interest rates, right? Maybe after, in February or whatever they said they were going to start, how many of that liquidity will be pulled back because they want to pay back their loans before the interest rate actually rises, right? If you're
Yep.
thinking about that macro side of things, I don't want to pay more interest. So I'll just take the money out of the stock market now that was in my mega tech and in everything, and I'll give it back to the bank, and then I'll play it safe for the next few years,
Yeah,
and therefore
I
causing a
mean,
drop.
I think that's what a lot of people are saying. I don't quite agree. And the reason is this, right? For all the talk about raising interest rates, it's 3 rate rises next year. We are going from somewhere historically at its lowest to somewhere historically still very, very low. Right?
Low,
We are not
yes.
going we are not going back to the days of 4%, 5% Fed rates, right? We are going to
I don't think we'll ever see those
one,
days again.
maybe 2%, 2.5 by 2024. That's still extremely low, right? So,
Hmm.
that whole point about rising interest rates, rising costs, yes, obviously, but it's not that big a deal, I would say. And even if it was, you could say that a 5% increase in my equities would more than make up for that 1% increase in interest rates, right? So I don't think it makes too much sense as a story. I know people like that
Hmm.
narrative, but and maybe there's broader macro views about how a rising interest rate means that people have less cash generally, so they take it out of the stock market, and that's fine. I mean that's macroecons 101. Fine, I can accept that. I just don't see, and that's why I also say that that there will be a drop in the big tech next year. I think it's just a causality thing that I have an issue with, right? I'm not quite sure if one necessarily causes the other, but
Hmm.
still weakness. As you say, right, the narrative drives the price. So yeah, it could still fall and take a profits now if we have them, right? I did take some. So full
You did,
disclosure,
is
I
it?
did
All
I
right.
did I did take some.
Look at
Right,
this
I'm
guy.
putting my money where my mouth is. And next year we need to look for
Nice.
sponsors because I'm broke.
Okay. Let's do it. Let's do it.
Yeah.
Ah, man, yeah. So I think, yeah, for me, it's definitely a flight to safety, right? For big tech, just as an ending note. And maybe we can talk about that towards the end. But I am looking to invest in that in early Q1, because mainly in
Yep.
Singapore we don't really get much interest rates in our banks,
Yep.
and even with the drop, it's still going to make percent more. If it makes 1% the whole year, I've made more than putting it in the bank. So
Yeah.
that's
Fair.
always good.
Yeah,
All right.
with cheap transaction costs now, it's so much easier to beat the risk-free rate in a bank, right?
Exactly.
Yeah.
Exactly. All right, number three,
Cool.
China. All right, a topic that I don't know anything about. Well, very, very little. So, Anthony, all for you.
I think China. Look, I'm sure it's been terrible, right?
Yeah, of
that
course,
that
of
that
course.
it's been terrible. It's and I don't know what to think. Like I've always felt, oh yeah, it will blow over. It will just take a while. I've said that since I think April or May.
Hmm.
I remember telling my friend, in June, don't buy Tencent now. Wait for 6 months. The regulatory overhang should hopefully clear itself by then. It hasn't. We are now in December 28th. It hasn't. Nobody still really knows what's going on. So it's a well, keep a lookout for me. I mean, I have my positions. I'm holding on to them. I'm not selling off. But again, as part of portfolio strategy, you kind of want a maximum allocation to each sector that you like, right? Or each counter or each broader sector you believe in. And I've hit that cap, right? And so I'm not
Mhm.
going to add to it. That's just my play. I know people who keep averaging and averaging and averaging. I'm like, dude, how do you have so much money, right? You can't keep averaging down. You have to stop somewhere. Even if you believe in a story, and that's where we
Mhm.
are right now. That being said, I think China, and I'm a relatively big China bull. I think it's going to be fantastic. It's still a growth story. The problem I would have is with common prosperity, with this redistribution of profits. Even if you are Alibaba and you make super normal profits, you're going to have to give some of it back, right? It's not going to accrue to
Mm,
shareholders, and that's the problem. Like they are fantastic underlying business, maybe a bit challenged, slowing growth, but it's printing money, right? It's a money printing business. But at the end of the day, if you're going to donate your profits away, what's the point? It's not going to come to
true.
me as a shareholder. I'm not as interested anymore. So yeah, rethinking my China play, maybe a bit more indexing,
Mm,
a bit more movement towards the consumer side or the AI side, just to try to ride the growth, right? So
got it.
looking at big tech doesn't work as much, I would say. I don't know, right?
Mm.
But I think maybe a tilt in capturing the broader market there rather than trying to be a hero and pick stocks might be the play.
Right, because of all the, I mean, and in all fairness, it's because of the policies. It could be changing and ever changing quite quickly as well. So
Yeah.
keep it diversified is effectively what you're trying to say. Unless you really, really know what you're doing, or you're a day trader or something like that,
Yep.
then go for it. But I think for average investors like you, me, and the coconuts listening in, a diversified index fund could be better. I mean, in the words of
Yeah,
Warren
a
Buffett,
diversified
you can't
fund
outdo it.
focused on China would be
Yeah,
interesting. Other than that, Tencent, right? That's the one.
yeah,
That's the one
10 cents.
that I really really like. Tencent, just because they are dominant in a global market, right? In gaming.
Mm,
So Alibaba, JD, whoever else, they are still very China focused markets. Tencent, because of their investment structures, have really shifted to something that's
overseas.
a lot more international. I mean, they have WeChat, yes, they have a lot of the big China presence, but they're like a VC fund to me, right? So
Mm,
and so that's great, and I think and the CEO and all, they were former Goldman bankers. They knew what they were doing for M&A. So yeah, I
got it.
think that's potential there. So
Okay,
not
cool.
selling my Tencent shares.
But the rest reallocating to a diversified fund.
Yeah, the rest might be relocating. I might add more actually, and have a greater weightage to a diversified fund just because
Got it.
it's lower volatility. And at
Got it.
heart, I
Cool.
like value, right? And I think there's value
Mm,
there.
no, definitely. All
Okay,
right, the next one.
what's next? All right. Safe place, right? So your defensives, your financials, your REITs, your utilities. I mean, for any coconuts listening, if you haven't listened to our last episode about why we think these are important, please go and listen. Right. Jeff has like and half an hour on it. So just go and listen to that and come back here and we can talk about what we do.
Yes, yes. I think as a gist, he mentioned, like, during interest rate rises, these are usually the safe havens to go to.
Yep.
Am I right to say?
Yeah, exactly,
Yeah.
right. For financials, it's increasing net interest margin, utilities because people can sell Facebook shares to pay their bills, but they need to pay their
Mm,
bills. REITs, because I like REITs.
right.
It's up in the air whether or not they are net beneficiaries in a rising interest rate environment, but I think they are safe enough in terms of volatility, and same for
Got it.
dividend plays. Yeah.
Got it. Yeah. Definitely. I think these are also good areas to look into. I think they're one of the energy sector as well. We can definitely take a look at that as a good play as interest rate. Well, we expect interest rate to rise over the next 2 to 3 years.
Mhm.
Yeah, I don't have anything in my portfolio in this actually. So I don't have REITs. I don't really believe in REITs, and maybe we should do a
Okay.
topic on why we disagree. But
Yeah. Exactly. Why?
I a um no, there's REITs are usually leveraged as well, aren't they? Unless you get an unleveraged
Yeah.
REIT,
I mean, they are all leveraged in the sense that businesses are leveraged, right?
of
Businesses have
course.
debt, REITs have debt, problem solved. The difference I would say with a REIT is that they are legally mandated to have a low leverage ratio. Well, not low, but they can't have more than 50% leverage. And in fact, if we have a REIT that's 40, 45%, analysts start screaming out, this is a red flag, you don't like this, whatever, right? And if you think about it, 50%, if you own your home, I'm sure you have a greater leverage than that on your house, right? Do
Yep.
you think that's over leveraging? Yeah, maybe no. So that's REITs, I mean that's a topic for another day. And if we want to talk about REITs, but yeah, they're leveraged. They pay in Singapore at least, right? And this is why I like REITs compared to buying indexes. So to me, REITs and dividend plays and financials, they are stable. They give you some cash flow. They're not going to die. You don't need to monitor them
Mm,
too frequently, and that's the anchor in your portfolio in that sense, right?
got it.
And that's your volatility lowering stuff, as I said. So that's that, and I mean, we are in Singapore. If we buy local REITs or local banks, we don't have exchange rate risk, unlike in the US. We have no dividend withholding. We have no capital gains too, which is great, but we have
Yes.
no dividend withholding compared to buying a US REIT or a US dividend player, or a Chinese bank, right? So it's easy to monitor around the same time zone. I don't know, right? These are very comfortable. They're very familiar things to you. Yeah, they won't give you 20% a year. Some of them might, but by and large, they don't give you 20% a year.
No.
They might give you 6, 7, 8. Well, it's good enough to build a base, right?
Yeah.
And with that base, it allows you to take greater risks. You don't need to go and buy mega tech. You just buy all your smaller stocks, because that's where you want your volatility. So I think it has a place in a portfolio. Yeah, but that's me.
No, fair enough. Fair enough. Um, cool. Definitely. All right. Shall we move on? What's the next big topic? Ooh, the next big topic. Crypto.
Crypto.
All right. So we're approaching 2022. If you don't have crypto in your market, in your portfolio, please go get some. Uh, is
Well,
probably the motto. It's probably the motto. Yeah. Motto for me, at
yeah.
least, because I don't have. So I'm looking at crypto in the market.
Hmm?
I'm looking to go into crypto finally, and been doing
Yes.
research over the last 3, 4, 5 months. Just I'm trying to understand the different type of coins, what an NFT was. I have no idea what an NFT was.
It's okay,
All
bro.
these.
Close your eyes and buy.
Okay.
Confirm win one.
Right. You better read the white paper, otherwise it'll end up like Squid Game, right? Oh, that was a coin, wasn't it?
That was a coin. That was a coin.
That was a coin.
But
Okay.
it's fine. You okay? Read enough to make sure you can sell, and you'll win.
Right.
Right? It's just how long you hold.
Definitely. But I definitely see 2022 as a really positive for crypto, right? Because
Mhm.
as interest rates goes up, as people say, alternative measures, will crypto go up? That's another question. Will it not? How will the allocations be? And now it's effectively one big digital asset, or one other investment asset that
Yep.
you would need to take into account when building out your portfolio. Right. The usual things that I learned in finance class in uni no longer fully applies, mainly because there's a new asset class. But I think one of the things that for me, just to understand, is I would stay with the cryptos that I understand. I would stay with the cryptos that are big enough so that they won't fail. And that could still very
Mhm.
well be happening. What are your
Okay.
thoughts?
I disagree. Okay,
Okay,
I think
great.
this is the one topic where we really, really, really disagree with each other. And like I think crypto is interesting, right? And I
Hmm.
disagree on so many levels, so I don't know where to start. Okay, so the first is it's a new asset class, right? Yes, completely agreed. Do you absolutely have to have exposure to it? I don't think so, right? Like bonds is an asset class, commodities are an asset class. I don't have any exposure to those. I have no interest in getting exposure to those. So I would challenge a bit to say that it's a new asset class. You have to look at it and to go whether it fits your purpose. And my purpose is I want to make as much money as quickly as I can, right? So yes, crypto fits that purpose. I want it.
Hmm.
If it's not, if you are older, you want to be safe, you're happy with 6-7% a year, you don't need to learn a new asset class to get that returns, right? Your funded your the STI gives you those returns. You just buy index and forget about it and live your life. So that I mean it's very personal, I would say. Right. But of course, coconuts, if you're interested in making a lot of money very quickly or losing a lot of money very quickly, then yes, crypto should definitely be in your portfolio. Okay. And okay, so that's one disagreement. Other than that, I don't even know where to start. Ethereum is safe, yes. I completely agree with that. But again, I would say this is a portfolio allocation issue. It's not an individual asset class issue. So if grows up 20, 30, 40% a year for the next 5 years, is that great returns? Yes. Could you have got there with lower volatility with your, with amplitude, for instance? Probably yes.
Mhm.
Right. So is there a different, a different risk reward that requires you to go into crypto? Again, maybe not. I mean, it's nice, but not absolutely necessary, right? But and of course the last one is, oh yeah, Bitcoin's an inflation hedge. Crypto is divorced from the traditional markets. The traditional markets can go down, crypto will go up, and that's it.
Actually, we have not
I don't
fully
think that's
seen
true.
that. Yeah. So
Yeah,
like the last
exactly.
quarter, everything dropped.
Yeah, everything dropped, right? When the market went risk off, all risky assets, including crypto, dropped. When the
Yeah.
market went risk on, all risky assets except Bitcoin went up. So Bitcoin hasn't done very well the last week or so. Although the other altcoins have, right? So that there's a narrative out there about well, the crypto market is uncorrelated with the traditional equities market. I think you need to relook at that. I don't think that's very accurate. Is it is Bitcoin itself a store of value that challenges and that you need to hold on to inflation because it's digital gold, and in fact it's better than gold, and it's an inflation hedge? Again, it's correlation, I would say, right? There is some correlation there, but I don't know if that narrative will hold. I can't see a
Mm.
mechanism for it holding, right? If there's inflation, and we are going to increase interest rates, and it's a risk off environment, Bitcoin will still fall, right? Maybe it falls less, and maybe it falls more, but it will still decrease. So if it's a hedge, why bother hedging with crypto when you can hedge when there are proper hedges out there that will
Like
save your ass,
options. Yeah.
like bonds, right? So so that's crypto. To me, crypto is just make money fast.
So then you
It's
effectively
gambling.
gambling is what you're trying to
Yeah,
say.
it's
So you're looking
gambling,
at
right?
crypto as gambling.
It's gambling without knowing that the house has an age, right? So
Mm.
so if you go to a casino, you know that the house has made the
Always an
odds in a
edge.
way such that they are going to win in the long run, right? We,
Yeah.
we learn probability and all that. With crypto, it's gambling, right? No, you are against the world. You don't really know the odds. They don't know the odds. Nobody knows what will happen. And there's that other layer of improving technology and all that. So yeah, the odds are it could be in your favor, right? And that's the type of and that's the type of wave that you want to ride.
True. I mean, yeah, coming back to it, yeah, I don't think it's uncorrelated. Firstly, I think I just want to put that out there, but I do think that it could be negatively correlated. At least that's what the papers have been saying. Whether it's true
Yeah.
or not, we need more data to prove. But I think it's a decent area if you're looking at a small percentage, maybe 5-10%
Mm-hmm.
of your portfolio, to put into this risky asset, as opposed to, in my case, growth stocks. So I might funnel some money out of growth stocks and put that into crypto, mainly because the returns are much higher. Yes, of course, you've got a much higher risk as well, but we can balance that out with other asset classes.
Yeah, exactly. But if you want higher risk, don't buy Ethereum, right? You go for your altcoins. I mean, don't buy Doge.
But
But
Dogecoin, is it?
Doge is slightly too far. I mean, too gambling for me. If I'm gonna buy Doge, I'll buy like the Ohm coins and all those
Right.
literal Ponzi schemes. Like they are Ponzi schemes. You read the white paper and you go, this is a Ponzi scheme, and you go, yeah, this is a Ponzi scheme. That everybody wins if they hold. So it's absolutely fascinating. Even just looking at human nature and game theory, but yeah, go buy your alt L1s, go your
I'm
Avalanche,
actually I'm
Solana.
taking a look at stable coins actually. So still understanding it, still trying to understand what stable coin is, what they do. But that's an area that I'm looking into.
Yeah. Okay. Then I guess stable coins, just look at Anchor. Gives you 20% return on a stable coin. Fantastic. Kind of. I kind of use it as like a fixed deposit now, where I park my money
Right.
that I
Okay.
want to buy into crypto, right? So I transfer it onto a
Right.
stable coin. I mean, it's theoretically pegged, right? So
Yep.
you put it on a stable coin. You land it on their platform. You get I think it's 19.5% APR.
Oh
Of course,
wow.
there's risk. And the risk here is not so much. I mean, one is that the interest rates change, so sooner or later they'll drop. There's a smart contract risk in the sense that it could get hacked, as with everything.
Yes, of
And
course.
I mean, you could buy and you can buy insurance, right, which costs like 2%, and that will remove that risk. So there's many ways to play it, but I think stablecoin yield farming for stable coins is something that you can do with spare cash, I would say.
Got it. Cool.
But yeah, we can get Jefferson on to talk about crypto
I think that's a great idea. I think we should.
too.
Yes.
I think he'll have like specific crypto, right? Not just generally. But yeah, I think
Yes.
yeah, you just take more risks, right? If we are going to go into crypto, to me, it's all about trying to 10x your money in a year, or 20x in 5 years. So, and if that's the case, that's not really Ethereum anymore. It's all your other funkier things that they are earlier stage. It's like a VC, right?
Mm,
You kind of have to treat it like a VC where you bet on 10, 15 projects, and one will give you the outsized returns that will pay for all of them. You know? And if you're just going to buy blue chips, to me, there's very little point. You might as well just buy growth stocks. They're both volatile. They are both decent returns over a few years. It's
yep.
without the risk of getting hacked, right? And without the risk of being in a new asset
All
class
the
that
extras.
is
Yeah. All the
risky.
extra
Yeah.
bits. Yeah. 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 All right. Last topic. All right, Anthony, why don't you give us a quick 1-2 minute dissect of what you're going to do over the next couple of months.
Okay, cool. So I mean that we've kind of gone through it one by one, right? So small tech US will slowly. I already have some. I'll slowly buy into them a bit more, but
Yep.
but smaller than my usual allocation. Big tech, I'm actually thinking of taking some profits off the table, so I'm reducing my allocation to big tech. China is it's maxed, but there might be a bit of shift in terms of focus for me. Crypto, I really like it, right? I've been playing with DeFi wallets over the past 2 weeks. It's really, really interesting to me. So I'm
Mm,
actually putting more money in both for stable coins as a matter of yield farming, right? Because to me, it's
okay.
like free cash.
Hmm.
And other than that, it's the really, really the more risky assets in a sense, right? And building a portfolio of 15, 20 coins where you think they will be the future of crypto, and that's a bet for the next 3 to 4 years after the bear market. It's not it's highly unlikely they will double in the next year or so, given where we are and how high valuations are. But it could 10 times in 5 years after the next bear.
So,
So
so it,
yeah,
it it sounds like you're playing. It sounds like you're a VC putting your money in like 15 different startups, and when one
yeah.
makes it.
Yeah, I just need one that becomes Facebook and it's like, hooray! I'm retiring, boss. Goodbye.
No, cool. Sorry. Yeah. Anything else to add on that front?
No, no, that's it. It's just stable coins, crypto, and shares. Shares are shares, right? We know what's going
Yeah.
on there. So it's just slowly adding. I think with everything, including crypto, it's DCA, right? I'm maybe a bit of a pessimist. I feel like everything is going to crash. So put your money in, but slowly, right? You don't need, if you have 100K now, don't need to chuck it all in. Don't be silly, because with crypto that could become 50K next week. So don't do that.
Mm,
But just put your money in slowly, and hope and pray, because we don't really know that in the longer run this works out.
definitely. Cool.
How about you?
Well, I think for me as well, I think we were just going down. We were just talking, but I think to consolidate, my stocks right now, I am DCing a little bit. I still have a little bit more money to go in. If it drops further, if not, I'll just hold it as cash. But I am waiting for Q4 earnings to pop.
Mm,
I really do think that there will be a little bit of a jump. If not, I expect 5 to 10, because I do expect with Omicron and with everybody else moving back to work from home, they're just going to subscribe to all this tech portfolios that I that I have. And then I'm actually looking at liquidating, right? Because I have no
okay.
idea how it's going to happen in the growth stock format, in the growth stocks sector, mainly because I have no idea what's going to happen when Fed looks to increase their interest rates. All that volatility. I'll just take my gains. I'll wait for a couple of months, see where the market is, and then slowly go back in. That's the way that I look at things. Of course, crypto is one. Looking to go into it. I just don't know when yet, but I do have the money in the wallet waiting to waiting to buy.
Oh, you funded an
Um,
account.
yeah, I have Gemini. Yeah.
Oh, hooray! That's progress, man. That's the
Thanks,
first step.
buddy. Thank you.
Let me send you a crypto.com referral code.
Hey, okay, done. Yeah, so I have a wallet. I have all of that set up. It's just pushing the button in to buy. So I'm just waiting, understanding a bit more of the market. Of course, looking a bit more exposure into mega tech. That's the part I won't liquidate, mainly because I think that will still do better than my bank account. So there's definitely that play. And lastly,
Everything that's bank.
yeah,
Everything
true.
that's better than a bank account.
Well, unless you lose money, then obviously it isn't.
That's true. You can't lose money. It's just a matter of time.
Well, you never know. You never know. But yeah, and lastly, I think my big play that I do here for retirement is real estate, right? So instead of REITs, I just buy real estate. It sounds like it's easy, but it's not, right? So
No, it's terrible.
yeah, it's a lot of work, but the returns and gains are quite good there if you know what you're doing. So yeah, looking at that in 2022, 2023.
All right, exciting times. We'll all what next year, I'm sure. It's a good year.
Hopefully, yeah.
Hopefully, I mean, Chinese astrology says that it's a bad year for me, but it's fine. We'll manage.
Right.
We do risk
Damn,
management now based on
It's-
star signs.
Well, looks like we quickly need a sponsor to negate whatever you've just said, and then
Yes.
and then we can get started. Yeah.
Yeah. All right. Sounds good.
Awesome.
Cool.
All right.
Anything
Thanks,
else?
Coconuts, for listening in. No, I think that's roughly it. Thanks, Anthony, for having me again and being back on the show. I think it was great to be back.
Yes. Good to have you back, man.
Cheers, guys. See
All
ya.
right. Cheers, guys. See you.